Welcome to Digital Finance Today, and this is actually our first episode of this series. And in the Digital Finance Today podcast series, we're going to be talking about changes in financial services. We're going to be talking about fintech, or financial services technology, changes in the market, the global market of finance, and essentially taking a long, hard look at what's going on today and then also what we can expect from tomorrow. And it's going to be a longer running series, and I'll give you a little bit more background in a second. My name is Markus Lampinen, and I'll introduce myself in a second as well, and I'm here with Saeed Hassan. So starting off, Saeed, why don't you go ahead and introduce yourself in a few words to our audience, give a little bit more context, and then I'll do the same before we get started.
Fantastic. Well, it's my pleasure to be here with you tonight, Markus. As you said, my name is Saeed Hassan. I'm managing a consulting and advisory unit within the Grow VC group, which is called Grow Advisors. Let me just briefly explain what that means and what I actually do. It actually involves three main areas. First of all, we help our clients identify and develop businesses that are built on alternative finance and incorporate fintech solutions. As examples, we look at crowd investing, P2P finance, and other forms of online capital raises as well. Other examples which we're looking at these days, which are becoming more prevalent in the market all around the world, are investing services, where the objective is to create more efficient marketplaces aimed at, for example, wealth managers and asset managers. So we look at robo-advisor platforms, either as new businesses or as a general transition to digital finance. Just to explain a little bit about how we actually do that, our work often begins with the planning phase, understanding the digital strategy of our clients, and then we also go beyond that and develop solutions and help execute the ideas themselves as well. We often do this through our partners, including those at Crowd Valley. We look at collaborations as we're aware of the different technologies in the market which are currently impacting finance. And that also brings a little bit of business sense for our clients as well. A second main area that we work with, as we're advocates clearly of digital finance, is we play an important role in developing the environment for fintech in general. This often involves keynote presentations, panel discussions, and also close collaborations with the media and even technology parks. We also talk to regulators and associated professionals in the field to increase the awareness of what's going on in the market and also as a guide to what might be the best way forward for our clients. And finally, as I say, we also track and analyze the different changes taking place in the market. We use this to identify best practice, even to forecast trends of what might actually be coming in the next couple of years for our clients, and use that to guide on future digital finance strategy. In our team is spread all around the world. I'm sitting here tonight in Hong Kong, and you're there in San Francisco, which is great. But we also have a team present in all the main business centers of the world, so New York, London, and also in the tech centers as well in San Francisco.
Yeah, it's working in this group, the Grow VC group that we share. It's actually funny that time zones become very, very literal in that sense that, it's my morning, it's Saeed night. We were just talking earlier that from our personal habits, and this time actually fits quite well. But it's something that, especially in the business environment, and I'm not going to say that it's new, but decentralized working and decentralized tools and the fact that a lot of these technologies, distributed technologies, they enable working in various different novel and new ways. It's an interesting phenomenon to look at essentially across the world, how it's becoming a lot more you could say that it's becoming a lot more fluent in time zones and in working across various different geographies, which, again, it might seem very, very natural to us. But at the same time, it hasn't been in place for a long time. I mean, just take 1 decade back, and 1 decade back before that, phone calls were incredibly expensive. And it's one of these things that the point that I'm getting at is when we look at finance, for example, when we look at digital investing, when we look at what's going on in the market, peer-to-peer lending, real estate platforms, what have you, it's very easy to take them for granted in a way that they've always been there. But that's certainly not the case. So just a little background on me. My name is Markus Lampinen. I run a company that Saeed also mentioned called Crowd Valley, here out of the Bay Area in San Francisco in California. And what we do is we have a product, a digital back office upon which these online investing and lending services can be created. So, for example, an online business debt marketplace could be built on our open API in our digital back office. You could build new construction, residential real estate platform on top of it. You could build a solar bond marketplace. And the front end application, the client side application, it is very, very customizable with the API. So depending on how you want to implement it, then it can support various different asset classes, various different models, various different niches in the market. Our focus is very much on the back end, so the nitty-gritty that goes on behind the scenes, the origination systems, the investor onboarding or lender onboarding, compliance, audit trails, workflow management, all of these nitty-gritty things like access right management that are incredibly important to work with. At the same time, they are not necessarily the ones that you want to invest the most into. It's like a rabbit hole. I mean, the deeper you go. But that being said, it also gives us a very, very interesting perspective on the world. And as such, we also very much try to further the development of the ecosystem by releasing different types of insights, tracking different types of data, with our partners, working on different types of indexes, different types of analysis, and then also just being advocates for what digital finance means, what fintech means, and what it does not. And one of the things that we often emphasize is that with any growing new market, there is a very, very clear need for substantial knowledge. And that goes in part to what Saeed was saying earlier, that just looking at what these markets actually mean in a very, very tangible manner, that can be very helpful. But just as a note of background as well, the Grow VC group, which Saeed and I share, in terms of Saeed running Grow Advisors and me running Crowd Valley, and then the Grow VC group being invested in both our companies, and in addition to our companies, many other companies in the digital finance market. The Grow VC group actually had an established podcast back in the day. We started out a long time ago, but we ran the Everyone Funding Startups podcast when equity crowdfunding was starting out in the market. And that podcast was widely successful. It got hundreds of thousands of listeners. And the reason that we've been looking at essentially establishing this podcast format again in the form of the Digital Finance Today series has been very much from taking our experience from running that one podcast and then looking at how much the market has matured since then. It is still very much a nascent market, but I'm very excited about what we can actually bring and explore in this series, just looking at the level of access that we have today and the amount of things that are going on. But maybe to take a step back, Saeed mentioned that you mentioned that you're sitting there in Hong Kong, and there's obviously a lot of action going on there. Why don't you take a little bit of why don't you walk us through in terms of what you're seeing over there? What are kind of the general attitudes and appetites, and what's actually going on the ground floor in not just Hong Kong, but Hong Kong and Southeast Asia and Asia at large?
Sure. I think there are so many different clients at different stages of development that it's easy to generalize and say, well, Asia as a whole is doing something either the same or different to the rest of the world. But if I may just give you a couple of examples, I was at a recent conference just a few days ago, and we asked all the participants there who happened to be heads of functions of asset management firms, and some of the largest firms in Asia, if not the world, were present. And the question that we asked them at the beginning, before the discussion itself, was, how would you describe yourself as a business when it comes to digital finance and where, in terms of developing business models and so on? The answers to the questions or the different choices they had were, they could have classified themselves as just generally looking for what's happening in the market, so just trying to increase awareness, all the way up to looking for opportunities, maybe creating a minimum viable product or developing opportunities. We also offered as an option for them to classify themselves as having a competitive edge or maybe even leadership in a specific area within digital finance. And the curious thing was, again, amongst a group who consider themselves as leading industry leaders within asset management, most of them actually chose level 1 or level 0, which means they were looking really to understand the market a little bit more. And for me, in the beginning, I thought, well, I was expecting maybe more advanced thinking from some of the guys there, but actually it doesn't surprise me when you look around, and I think this isn't really just typical of Asia, but I think more general in other regions around the world as well. When it comes to fintech, it's still quite a new area for many, many organizations. And when we see there's a lot more media coverage these days, it's a lot more in the news. But what I'm seeing from the clients and from the different people who I speak to, whether it's here in Hong Kong or in Asia in general, even further afield in Europe, there's a great need for people to really understand what's going on in the marketplace. And then from there to decide what might be the best way forward. So I still think we're at quite an early stage, even though there is a lot of media coverage with regards to fintech this year, here in Hong Kong and in Asia. And I think there's a huge opportunity there, clearly, because the change is coming, and a lot of the people now are just looking at how they can get involved and see how their organizations can adapt to the digital transformation which is coming.
I think it's also curious in the context of asset management that I sat here in our office here in the Bay Area that with a large asset manager, they were managing, was it over $200 billion in a debt portfolio for a specific sector, trying very hard not to give away who this was. And the interesting thing is they have a board level decision and strategy in place to pursue digitalization of their not just sales channels, but their asset base in general. Try to figure out what that means. I mean, try very, very hard. And it's a very interesting thing that it seems to be across the board that there is a very, very clear notion that something is happening, that the entire market, not just the hot and very covered fintech firms in the press, but the entire market is calling for a shift in the paradigm. And it's very, very common that everybody recognizes this. But then the actual implementation, the actual action, that is something that I think varies so much across the board. That even if there's an appetite to do something, then what that something ends up being, it can be very, very vague. It can be very uncoordinated. And I'm not by any means implying that these guys aren't smart. I mean, these companies are brilliant at what they do. But it's just that when you look at, for example, the market, and look at some of the hype terms like crowdfunding, for example, then what does that mean? And it's a very, very difficult proposition to start actually investing a lot of money into something if you don't fundamentally know what it actually stands for. And this is just kind of part of looking at this market's development, that there does seem to be that appetite, that we talk with a lot of CEOs, a lot of C-level executives at large financial institutions. And many of them are saying that they have essentially the go-ahead to invest in this market. But what their actual investment ends up looking at, that varies so much. And one of the concerns that you might have is that unless there's that fundamental understanding of what that investment needs to look like at the ground floor, then that can end up wasting a lot of time and a lot of money by essentially making an uncontrolled effort. Again, not by any means implying that these companies aren't smart at what they do, but just at the market stage in general, it is so vague. And it's not helped at all by the fact that the regulations in place. I mean, here we are at the end of 2015, and we have a lot of regulations. I mean, the Title III of the Jobs Act has finally been decided on by the SEC here in the U.S. FINRA has essentially also kind of complied and worked on their rules, and it will be going into effect next year, in the second quarter of next year. So we have a lot more certainty in terms of regulation than we've had before. But at the same time, when we look at financial services regulation, then we're not at the stage that these rules have been established and tried for decades. I mean, that's certainly not the case. A lot of these rules, they're still very, very early. And then what you see is a lot of financial services companies, like, for example, just to take a couple examples, that some of the larger banks like BNP Paribas, they've developed a lot of very new digital strategies in terms of digital banking, which obviously has been around for a long time, but also these types of pre-purchase and rewards crowdfunding platforms. But then you have also conglomerates like the ING Bank, which from what it looks like, and I have no insider information on this case, but what it looks like is that they're essentially pursuing a very, very diversified strategy where they're essentially getting positions in various different countries, doing what is not necessarily comfortable, but what is possible within the regulation in that specific country. And it's interesting because the regulatory envelope, it develops and it's pushed very much step by step. Like, for example, in some countries, you might be allowed to do the pre-purchase or reward type of crowdfunding, like in Australia. But at the same time, it might be that taking that and leveraging that into a position of doing securities crowdfunding in the future, then that might be interesting. Or then, for example, business debt marketplaces in various parts of the world that have huge interest rates on corporate debt. That might be also very interesting in, for example, Eastern Europe or in some countries in Southeast Asia. So these types of things, I think, are being developed. But at the same time, the appetite is most certainly there. But it just seems oftentimes that the actual end application in terms of what is actually being developed, that's something that, especially translating the will from the very top to then what happens on the ground floor, that's not always so clear.
Yeah, I tend to agree with what you said there, Marcus. And I think thinking about the reasons why the rollout of fintech around the world, the different organizations, is taking that approach is precisely because the world in which these organizations operate in, at a country level, there's so many differences in terms of jurisdictions and regulations. You mentioned the US just briefly there, which is only now just approved Title III. And many countries do look at the US as a role model and a country that they can follow in terms of regulations. And you see the differences compared to many of the Asian countries here who are, Hong Kong, for example, doesn't have clear regulations on crowdfunding yet. However, there are organizations here which are operating under existing regulations in, for example, P2P lending. Let's take China. It's actually the biggest market in the world, as you know, for certain types of alternative finance, including P2P lending. So there are huge differences around the world. And you mentioned ING. It's a great example how one of the largest global banks is looking at implementing different executions within fintech in different markets and possibly learning how each of these different activities are being executed in the market with a view to what their bank may look like 5 to 10 years out. And that's a point that I want to make as well, that innovation in fintech isn't really a destination. It isn't something that you plan to do and then you tick a box a year from now or 18 months from now. You mentioned something earlier which I firmly believe in as well, which is this needs to be something, when we think about innovation in finance and fintech, that has to be championed from the top of the organization, and how fintech may be incorporated into an organization or may even transform an organization 3 to 5 years from now. And you see examples, as you mentioned, a couple of the banks earlier, which are taking that approach. And many of the discussions that we have with our clients don't start with executing platforms or looking at incorporating technology. It starts with what is their vision with regards to digital transformation within their organizations, and how can technology play a role within that? Let me just add one more example to what I'm referring to there as well. We speak of Title III and regulations, which often are complicated because they involve end users, retail investors, sophisticated professional investors, and regulators. One of their roles is to protect and to oversee what's happening to the investing public. But one of the things that we often tend to overlook is how digitization can affect other parts of a financial organization before reaching the end consumer, meaning how can online processes optimize, make more efficient processes which aren't client-facing. Because just to be able to deliver a product as an asset manager to the public, there's a whole organization that leads up to that point where the product is being sold. And one of the areas in which we're looking at today is those organizations who don't feel ready to look at platforms or fintech at the client-facing stage. How else can they incorporate fintech within other areas of their organization to make their processes more efficient, whether it's in terms of assisting their intermediaries, not necessarily cutting out intermediaries, but assisting them in the transfer and flow of information, looking at more efficient flows of information itself, and also, of course, getting more information to more people faster and more consistently as well. So I think there's a lot of different things that many organizations are looking at today, and it doesn't necessarily always involve client-facing opportunities as well.
One of the things that I was just thinking about when you were talking about that is, a lot of this must be incredibly scary. I'm just looking at There was a great Thomson Reuters piece just a little while ago about essentially how different technology initiatives, like the fact that we have a lot more finance service APIs, I mean, including the Crowd Valley Open API for these services, but also other financial services APIs that make essentially rolling out these types of services a lot quicker, a lot more efficient, a lot more decentralized. And I mean, if you look at that from an incumbent position in this market, that must be incredibly scary. But at the same time, I mean, that's also a daunting challenge for anybody in I guess, any market, but certainly so in a market that has a level of inertia as financial services, that the pace of change that we can expect for the future, I mean, I don't I don't think that there is any argument to make that it would slow down.
I would agree. I think one of the examples that I often look for examples of other industries and look at innovation and digitization in other industries and use those examples to illustrate what may come to the world of finance as well. And it's a double-edged sword. You're right. It does sometimes frighten people, thinking, well, we're not really equipped to deal with this, or we're not ready for this yet, or we have other issues to deal with. And today, many financial institutions who I talk to, they're so preoccupied and concerned with regulators and regulatory requirements and compliance and all the new rules which have come in the last few years, that they often don't have time to think about innovation because they're too busy focusing on other areas which are more real and actually even scarier today for some of them. But this does require long-term thinking and a gradual change. And I think the message is now not that this is necessarily scary. I think on the contrary, this is actually something which, as an industry, finance has the advantage of being able to see what's already taking place in other industries, whether it's social media, media streaming, or even the automobile industry with companies like Tesla today. One advantage, as I said, that finance has is to be able to see the types of change which are going to come and be better prepared for those, unlike other industries which maybe face those changes without hindsight, without knowing what was coming, and it was probably much scarier for them. So I think it's not as scary as maybe some people may think.
And there's probably also an argument to be made that, in a way, the financial services regulation that we've got around the world, then that does maybe set some type of boundaries and framework. I mean, certainly you'd hope that it does that, but also offers maybe some predictability, because the lines within which you have to paint the picture of the future. That financial services regulation, I mean, one of the things that we often talk about is just by essentially having an online presence. I mean, that doesn't change the rules of, what are best practices for KYC and AML and bad actor checks. I mean, those are going to be the same because you're going to be regulated just the same under the same regulation. That being said, it's not necessarily a bad thing. I mean, certainly we view the compliance requirements and the best practices of the market as something that makes the market a lot stronger. But also in viewing the future, then that's probably one of the benefits of the regulation, that as you start extrapolating into the future, like what does finance look 5 years from now, 10 years from now? What are the banking positions? What are the wealth management positions? What are the service providers? What are the specialists? Then you at least know that there are certain buckets that finance services regulation is, I mean, you can't really argue that it's going to go away. I mean, certainly it's going to adapt, hopefully, in the sense that it actually makes life more efficient and these services more effective in what they do, at the same time keeping them secure and safe for the consumer. But at the same time, it does have that interesting perspective that many industries don't have, that because of the regulation, then you might be able to essentially translate that into some type of foresight in terms of what actually happens in the market.
Correct. I think when we look at regulators, we often think of regulators as some people think of regulators as a hindrance and something that they need to deal with, and it's not necessarily pro-business. I think there's lots of different ways of looking at how regulators are approaching fintech. Clearly, there's a conservative approach, and that's certainly the case in many Asian markets. And Hong Kong is an example where the regulators are taking a very slow and measured approach to how they want to regulate the space within fintech. But at the same time, one of the messages that we often use when we reach out to regulators, because we do have relationships and we do communicate with the regulators in many of the markets, is they should also look at how fintech can actually enhance compliance. Because I think once we start reducing the scope for bias and for some intermediaries, and I'm not saying all intermediaries are bad or that they're prone to making, but clearly they're prone to making mistakes some of the times. Having automated processes, having more rigor, and having consistent messages is not a hindrance to compliance. In fact, it's the opposite. And I think what we're seeing now is many regulators are seeing fintech as potentially an opportunity to make compliance a little easier and also more in line with empowering investors or the end users, whilst at the same time making platforms a little safer as well. So I think there's always two sides to a story, and I think we often mistake or we overlook some of the positives that regulators can bring as well with regards to fintech.
I think it's also maybe it's where I'm sitting. I mean, Silicon Valley is notorious in kind of its, its worldview in many different ways. But at the same time, I think part of what's going on in this market is so much bigger than just technology. I mean, you have consumer demand. You have this changing landscape of consumers being able to effectively find any information at their fingertips instantly. And I think a lot of times we make this very plausible causation in a way that you have essentially banks changing because there's a startup that's doing X, Y, and Z. And I mean, in my head, that just doesn't make any sense. I mean, I think that both of them are part of the same phenomenon. I mean, if you look at, for example, what's going on with fintech services, with digital finance services, then the same underlying market demands, they are causing various different financial services intermediaries, asset managers, brokers, investment banks, what have you, different types of funds, to essentially look at their own positions in terms of where are they the strongest, where is their value add the most tangible, where is the service that they actually find defensible, or the position that they find defensible long term. I think that's happening because of the market demand. And at the same time, the market demand is sprouting these new innovations that have very, very, very specific functions in the market. For example, remittance, or then different things that open up various different possibilities, like digital ledgering technology, like blockchain, for example. And this is something that obviously gets tossed around a lot. But if you look at, for example, the future, then it does pose a very interesting question, that decentralized tools like blockchain that are inherently very, very different in their approach than what we've had in the central bank and of country border specific approaches so far, then it also adds a very interesting question. Whether or not we believe that blockchain is a means to an end, or just a means itself in terms of something that gets reinvented along the way, then it's a very, very interesting challenge that's being essentially discussed. And maybe it's a practical challenge in some cases. I mean, certainly blockchain has very interesting applications that are very real. At the same time, some of those are maybe still a little bit more hypothetical. But one of the things that, Saeed, you and I can just touch on a little bit is what we want to do with this podcast series. So one of the things that we started out with, I mean, digital finance today is obviously a very, very broad umbrella term. But the thinking behind that term is the fact that digital finance is going to reinvent itself many, many times. And fintech is a very strong part of that, but it's ultimately just part of it. I mean, digital finance will have essentially an impact that will essentially blanket the entire earth in terms of how these services are developed and offered. In some countries, in some parts of the world, we'll see a lot of leapfrog type of initiatives. I mean, for example, take Southeast Asia. There's a lot of different areas where likely peer-to-peer lending networks or peer-to-peer networks in general, whatever the application, are going to be quite predominant quite quickly. Saeed, you mentioned China earlier, and certainly in mainland China, the numbers are just phenomenal. That being said, look at everything that's going on in the world, that everything is in flux. It's certainly not, I mean, nobody has the golden solution at this stage. So one of the things that I'm personally looking forward to is essentially being able to leverage the Grow VC Group's different industry leaders, bring in different perspective, from our offices in London and our different partners around the world, but then also invite different industry leaders. I mean, very prominent asset managers, different public policy stakeholders, different actors on the ground, different people that are participating in either developing the market or then in kind of being, let's say, more adjacent to the market or looking at it from a different perspective. But really, as we go forward, then our perspective on the series is very long term, because looking at digital finance today, then what we talk about today and what we talk about in a year, they will differ quite a bit in terms of the practical applications. But just from my point of view, in terms of having been in this market for about 6 years now, and one of the central things that we often see, I mean, the central themes that all of the work that we do more or less revolves around, they are essentially three things. I mean, you have access, you have transparency, and you have efficiency. And certainly there's other things too, like you get more scale benefits, distribution benefits. But in a way, you can roll up everything to those three. And it's a very, very interesting thing to track in the future, given that some of these very core pillars of this development, they are also maybe not so characteristic of what we've had in financial services or finance in general in the past. And that's, I think, one of the most exciting points, that what it looks like today, what will look like in a year. I mean, it will converge a lot. And as we look back at the different conversations that we've had and debate different topical points in terms of what happens, like, for example, in about half a year when we get to talk about what's actually happening with Title III in the US and how it actually compared to what we saw already earlier in the UK or in Europe or in other countries, that's going to be very exciting. So looking at those types of things, I think that there's a lot to look forward to in this series. But Saeed, what are your thoughts on kind of, where we're going with this series and, the market in general?
I think those are great ideas and great topics for discussions. And I think in the end, what would add value, I think, to many of the people listening is, a couple of maybe on a couple of different levels. The first level being, what does it mean to me today? What does fintech mean to me today? What does innovation in digital finance mean? How can I incorporate what's going on in the marketplace? How can it impact my business? And how can I create, whether it's shareholder value or increased value for the investors in my business? Clearly, that's something which is very real and very tangible. And I think we will deal with those, or many areas which deal with those areas, I think, in the coming weeks on these podcasts as well. But I think it's also important to take a look at what may be coming. So, not just what's happening in the next 6 months or in the next year, but where is this change headed? What might the financial landscape look like 3 years from now or 5 years from now? Because often, a lot of the people who I come across are charged with making decisions which affect their businesses 5 years from now. And it's always a good idea, as you mentioned before, I think in one of the examples earlier, if you're entering at the ground floor, what does the 20th floor look like? And I think before people get into that elevator, to know, is it the 20th floor, is it the 25th floor, but to have an idea as to which direction that elevator is headed, how quickly is it going to get there, and what the 25th floor is going to look like, I think are also key areas in which we could also spend time discussing as well.
Yeah, and that's a fundamental point, I feel, because, just some of the conversations that we're having today, some of these financial services companies, they'll have tens of millions of retail or consumers that use their services. So these are not trivial applications. These are not isolated. These are very, very universal in the market. And just looking at what you mentioned, Saeed, in terms of impact, it's great what we're seeing in terms of data points today. But at the same time, looking at how companies are investing a lot of money and effort into these applications that will hopefully save them hundreds of millions, or even essentially become positions that generate billions of dollars in the future of value from investing in them, then they are very, very long-term views. And I think that's part of the rigidity in the financial services incumbent sector, that those types of decisions that have actual material impact, they have to be taken far into the future. And obviously nobody knows what the future looks like. That's a problem that nobody solved in the past and not today either. But that being said, it's going to be certainly very, very interesting to look. And one of the things that we'll certainly try to do in terms of this podcast series is bring you different types of data, different types of market trends, market insights, and then also look at essentially how these could play out in the future and discuss these, and hopefully also get many different very, very interesting points of view from the market, pioneers, obviously other than us, that actually kind of look at this from, maybe different perspectives from different countries of the world or different positions. I think that that's going to be something that we have a lot to look forward to.
If I can just, maybe as a final note, just to build on the point that you just made, I just wanted to highlight a study which I was reading recently, just launched by IBM. I think they asked 4,000 or 5,000 senior executives in many global corporations around the world. They were asked what is the greatest fear today, and the number one answer which came back from the survey was the Uber syndrome. And what global executives meant by that was they were afraid of a competitor or somebody coming in with a completely different business model and basically disrupting them or taking away a big chunk of their business. And the reason why many people said that is because it's real and it is happening today. And it is something which is affecting finance maybe at a small scale today, but it's certainly something that we see coming. And secondly, they were also asked, in terms of trends, what's the most important trend that they foresee in the next few years? And the answer that came back from the participants in that study was, I can't just understand my own industry, I must also understand about retail, technology, and more. And there's clearly a recognition from many of the global leaders today that it doesn't make sense just to look at their own industry, whether it's let's say finance in this case. They also need to look at what's happening in other markets and in other industries. And I think going back to what you were saying earlier, maybe one of the things that we could also incorporate in these podcasts is how successful digitization in other areas could also be used as the starting point for some discussions for people within finance as well, because we will see elements of those trends and those innovations in other industries being replicated and mimicked within finance as well. So that might bring a different flavor from outside the industry, which could also enhance maybe some of the discussions that we have in the coming weeks.
All right. Certainly a lot to look forward to. And we certainly invite our listeners to also send us different feedback and different points of view. And for now, you can, for example, send those to podcast@crowdvalley.com or then info@crowdvalley.com as we essentially establish the format. But we're certainly very, very open and very welcoming in terms of getting different perspectives of what interests you and who we should have on this series talking about different points. So, Saeed, thank you very much for joining me this, it's almost midnight your time, but today, it's great to kick off this series with you. And then to our listeners, thank you for joining us today on this special inaugural episode of the Digital Finance Today podcast series. So what we'll do is we'll make sure that this podcast keeps developing. We'll publish new episodes frequently as we establish this format. And certainly any feedback that you got, we'll definitely make a note to listen to and then act. So we'll talk to you soon on the next episode. Bye-bye for now.
Thank you. Good night.